I'm back, chat. I'm back. Game Awards 2025 was last night, so I want to go through some of the highlights of it, and of course, read a GameStop article or two. We'll see. We'll see where it takes us, but there was a lot to uncover for the Game Awards. I guess Claire Obscure Expedition 33 had a record. They won like 13 awards or something like that. Crazy. And an interesting stat that I didn't know until today. I guess the Game Awards is more viewed than the Super Bowl, which is insane. Like, that's crazy, bro. I think this is from 2024. The Super Bowl had like 120 million views, but 2024 Game Awards had 154 million views overall. So, I don't know. I think that's just an interesting stat. A very interesting stat. That's crazy, actually. Because, Super Bowl is one of the most massive sporting events maybe in the world, at least in America. I don't know how popular football is around the world, but yeah, that's an interesting stat. What's up, Muma? How you doing, bro? How you doing? And we had... So I guess we'll go through all the categories real quick, which most of them are Expedition 33, so I don't know, but whatever. So Game of the Year, of course, was Expedition 33. Best Game Direction, Expedition 33. Best Narrative, Expedition 33. Best Art Direction, Expedition 33. Best Score and Music, would you have guessed it? Expedition 33. Best Audio Design, it was actually Battlefield, which I'm actually not very surprised by that. I imagine Battlefield has really good audio, all the explosions and everything that's happening in the game. I'm actually not surprised Battlefield won this. That was my pick from this. So, Battlefield won Best Audio Design. Best Performance, Expedition 33. There were 3 nominees from Expedition 33 for Best Performance. I guess Jennifer English won. I've never played this game, so I don't really have an opinion on it or anything like that. Games for Impact, South of Midnight. I don't know what South of Midnight is, but at least it's nice to see something besides Expedition 33 winning. Best ongoing game, No Man's Sky. I was impressed with that one. I'm like, No Man's Sky does deserve a reward. They made a huge comeback. What's up, Down We Go? What's up? Best community support, Baldur's Gate 3, which that's a good pick. Best independent game, would you have guessed it? Expedition 33. Best debut indie game, can you guess? Expedition 33. Best mobile game, Yumamasum Pretty Derby. I don't know what that game is, but congrats to them. Best VR AR game, The Midnight Walk. Best action game, Hades 2. Was it Hades 2 the worst game on the GameStop Awards? I'm pretty sure that was the worst game. Best action adventure game, Hollow Knight Silksong. Good to see Silksong getting a win. Silksong was a good game. Isaiah! What's up, bro? What's up? Best role-playing game, Expedition 33. Best fighting game, Fatal Fury City of Wolves. I've never heard of that game, but it apparently is better than Mortal Kombat and Capcom Fighting, so maybe worth checking out. Best family game, Donkey Kong Bonanza. People were going nuts for Sonic Racing in the crowd. Every time they announced Sonic Racing, the crowd went nuts. But Donkey Kong Bonanza won Best Family Game. Best Sim Strategy Game, Final Fantasy Tactics, which, not surprised by that. That's a popular title. Best Sports Racing Game, Mario Kart World. Best multiplayer game, Arc Raiders, baby. I wasn't surprised by that. People love Arc Raiders right now. Best adaptation, The Last of Us Season 2. I've never watched The Last of Us on Netflix or wherever it's streaming. Maybe it's worth checking out. I don't know. Has anyone in the chat seen The Last of Us? Most anticipated game? Could you guess? I don't even know why they have this. Like, they don't even need other nominees. It's obviously Grand Theft Auto 6, of course. Oh, Charlie won Creator of the Year. I actually was watching his stream and he was like, anyone but me! And then he won. I think that's funny. I think it's interesting he won over Kai Cenat, but I would say Penguins overall is a very popular creator. Kai Cenat's just the most popular streamer. Innovation and accessibility, Doom Dark Ages. Best esports game, Counter-Strike 2, which, not surprised by that one. Not surprised by that one. Best esports team, Team Vitality, Counter-Strike 2. Best esports athlete, Chovy. I don't know who Chovy is. And yeah. And then, of course, Game of the Year, Expedition 33, of course. And then I want to go through the announcements real quick. Just some of the games I thought were interesting in the announcements. One thing I thought was really interesting was Amazon was a massive sponsor for the Game Awards. Amazon was a huge sponsor, and it makes sense why GameStop made their own GameStop Awards. I bet they tried to get a commercial or something in the Amazon or in the Game Awards, and it was probably expensive as fuck. So it was probably cheaper to make their own award show, basically. But I thought it was crazy how big of a sponsor Amazon was for that. Amazon's even making the new Tomb Raider. They're one of the studios working on the new Tomb Raider, which is pretty crazy. Amazon's getting into gaming, and that's very interesting because once people start to catch on that Amazon's starting to push into gaming, there's going to be even more eyes on GameStop, so that's great. That's great. Let's see. There weren't very many games that I thought were like super interesting. There were a lot of weird games that could be good, but I probably wouldn't play them. Of course, Star Wars Fate of the Old Republic. This is probably the most hyped game in my opinion. Like, I think this is the coolest game they showcased. That's crazy that they're making this game, or making a sequel to the Knights of the Old Republic, like 20 years later or something like that. Like, that's gonna be a good game, I imagine. Gonna be a really good game. Resident Evil Requiem, of course. They announced that Leon will be in the game. And I guess Resident Evil Requiem's gonna be like 2 different games. You're gonna be if you want to play as like the little blonde girl, it's gonna be like a horror game basically. But if you want it to be like the old Resident Evil games, you're gonna play as Leon. And I think there's another character as too. But yeah, Resident Evil Requiem's gonna be like 2 different games in one, which I thought was really interesting. What else? There was another game that I thought was pretty interesting. A lot of these games look pretty good. Street Fighter trailer looked kind of interesting. I guess Cody Rhodes and like Roman Reigns are in it, so I thought that was kind of cool. Lego Batman should be good. Tomb Raider's interesting. I think like I said, I think it's insane that Tomb Raider is the newer Tomb Raiders are being created by Amazon Studios. Like, that's wild. A lot of these games looked interesting. Diablo 6, of course. Diablo 6. Oh, that's Diablo 4 expansion, I guess. I thought that was a completely different game, but I guess it's just Diablo 4 expansion. Never mind. 007 looked okay. A lot of these games looked okay. Soros doesn't look as good as they hyped it up last year. Like, the trailer last year for Soros looked really good. But the gameplay on Soros didn't look the best, but I imagine it'll still be a good game. There was another game. Star Wars Galactic Racer should be interesting. You haven't had a Star Wars racing game since N64, I'm pretty sure. I don't think you've had a Star Wars racing game since then. And the Star Wars racing game on N64 is really good. Phantom Blade should be good. They're making a new Mega Man, which I think is a part 3-dimensional, part 2-dimensional, so that could be interesting. I swear there was one more game. I thought there was another game they announced, but overall, I would say Star Wars Fate of the Old Republic is going to be the most hyped, or the most exciting, in my opinion. That should be a really good game. And Resident Evil Requiem, I'm sure. That should be really good. That N64 Pod Racer game's fire. I played that 2 weeks ago at a friend's house. Yeah, that game's really good. I used to play it all the time growing up. Really good. Jiggle. What is up with you and jiggle physics? Never seen someone so obsessed with jiggle physics. Alright, let's get this stream clip, bro. Let's get this stream clip. The stream clips have been doing okay, so I want to keep doing them until I notice a negative change on my channel. I'm enjoying doing these. And I'm sure it's helpful to some people, because I'm sure some people don't read these articles. But GameStop's turnaround is working. The summary: GameStop has successfully pivoted to collectibles, with this segment now comprising over 31% of quarterly revenue. GME improved margins and operating income by closing underperforming stores and reducing SG&A, but overall revenue is declining. Only because they're closing stores. Revenue wouldn't be declining if they had more stores. Despite strong cash reserves and defensive positioning against short sellers, GME trades at a significant premium to peers. I estimate GME is slightly overvalued, projecting 14% downside. I rate the stock a hold. Interesting. My thesis for investing in GameStop is that its pivot into collectibles succeeded. This store was originally a place where you could trade in video games, and it still is, but now it's also selling sports trading cards and Pokemon cards. While its core gaming business may be shrinking, its collectible business makes up for that to some extent. GameStop also improved its margins significantly by closing some stores and selling other stores, but also looks like these improvements might be priced in already. Gaming could make a comeback, man. Gaming can make a comeback. There's a lot of good games coming out the next 2 to 3 years. A lot of good games. GameStop just reported its third quarter 2025 results. Its revenue fell 4.6% from $860.3 million in Q3 2024 to $821 million in Q3 2025. But they have way less stores, so I don't know why people think that's a negative thing. It's, in my opinion, I think it's extremely impressive. They almost matched the revenue of last year when they have way less stores. I don't know how many stores they've closed, but it's at least over 500. But its adjusted operating income rose from negative $24.6 million in Q3 2024 to $52.1 million over the same period. By reducing its store count, the company greatly reduced its SG&A expenses. Its efficiency improvements will deliver income growth even if its sales are choppy in upcoming quarters. And that looks likely because GameStop posted 21.8% quarter-over-quarter revenue growth in the second quarter. And that's because of the Switch 2 release. Console releases are massive for GameStop, as we've learned. This company is well known for being a meme stock. Its management has also done things that could be considered gimmicks, such as purchasing large amounts of Bitcoin. It's only 5% of their portfolio. People who focus on the Bitcoin, I don't get it. I don't get it. These factors could affect GameStop's stock price, so investors should consider them. But I also think it's worth to analyze GameStop like other stores that have posted major bottom line improvements. Other companies in this situation have paid down debt and bought back stock, and these actions have generated EPS growth for companies without much revenue growth. So the first thing I consider is GameStop's current balance sheet. Another thing is People looking negatively at the Bitcoin investment for GameStop is very positive if you're a GameStop investor, because people are going to bet against GameStop just because they think crypto is going to crash or whatever it may be, or, it's not pushing all-time highs all the time like it was a few months ago. So, from my perspective, yeah, I don't like the Bitcoin investment at all, but the fact that other people don't like the Bitcoin investment and they're putting so much weight on it, that's very positive for me as an investor, because it just means that people are going to short the stock or continue to ignore it just because of a 500 million Bitcoin position out of 10 billion in assets. Yeah, that's a huge deal. That's a huge deal. GameStop still has a lot of cash. In the third quarter, GameStop reported $7.84 billion in cash and $10.55 billion in total assets. It has $4.16 billion in long-term debt. Yeah, but $4 billion of it is 0% interest debt, so realistically, they only have 0.16, or what did that be, 16 million in long-term debt? Like, that's crazy. That's absolutely insane. Even when they have to pay back the convertible bonds, they're going to be sitting on quite a bit of cash, maybe like upwards of 8 to 10 billion with 16 million in debt. It really depends how the stock performs in the next year as far as the warrants goes, and then the next 5 to 7 with the long-term convertible notes. But yeah, GameStop is set up amazingly for the future if you're ignoring this 4 billion in debt here, because that's 0% interest. And also, they bought $1 billion in marketable securities, so they're actually closer to $9 billion in cash. So it could easily pay off its debt if management decided to do that. It is unusual for a store to keep this much cash on its balance sheet, because that can make it a hostile takeover target. What? A fund that is going for a hostile takeover can use the company's cash to finance the acquisition. According to Seeking Alpha, GameStop also has TTM free cash flow of $187.8 million, so its cash flow could attract a buyer as well. Of course, many Wall Street investors are more interested in shorting GameStop, and that's probably why this company still has so much cash on its balance sheet. If short sellers aggressively target GameStop again, the company has a lot of money that it can use for stock buybacks. I agree. Keeping cash in reserve if this happens again might not be the best use of cash for most companies, but it does appear that short sellers are still targeting GameStop. And a lot of people seem to ignore that they're making like close to 300 million a year just by having cash. So not only do they have that ammo if the stock gets low enough for a buyback, they're also making a decent amount of net income just by holding cash. Would I be happy if Bitcoin dipped and Ryan Cohen bought more? Only if it was a little bit. If it was like 100, 200 million, I probably wouldn't be too upset. But if they did another like 500 million position, I wouldn't like that. GameStop's pivot might catch short sellers off guard. GameStop currently has 15.4% short interest. It's actually like 16.2%. According to Seeking Alpha, this company currently has no coverage from Wall Street analysts, so it's not entirely clear why short sellers are targeting it right now. But its core business, video game trading, appears to be in decline. In the past, many shoppers went to brick-and-mortar stores to buy new video games and consoles, but now many of these purchases take place online. On platforms like Steam. GameStop's management is well aware of this trend and has pivoted the company into the collectible market, and this appears to be working. The company's revenue from collectibles increased from 17.6% in the first 3 quarters of 2024 to 27.5% in the first 3 quarters of 2025. And in the third quarter of 2025 specifically, 31.2% of GameStop's revenue came from collectibles. So this company's collectibles business is rapidly growing and it's stabilizing its revenue. GameStop's Bitcoin portfolio is a gimmick that could pay off. In its third quarter report, GameStop reported that it had $519.4 million in digital assets. The balance sheet line refers to its Bitcoin portfolio. Earlier this year, it reported that it bought 4,710 Bitcoin at a market price of $92,400 per coin. On December 10th, GameStop's coins would be only worth 435.2 million. So GameStop is reporting the value of its digital assets using a longer-term average, and its Bitcoin portfolio recently dropped in value. Well, the cutoff was before Bitcoin dropped to like 90, 80,000, so that's why it's a lot higher. But 435 million? I don't know if that's accurate. It could be, but I don't know if that's accurate. What's up, Varley? How you doing, bro? But GameStop's Bitcoin holdings only make up about 5% of its total assets. The company also has positive free cash flow, so it doesn't have any immediate need to sell its coins. I have no idea what the price of Bitcoin will be in 2026, but if the price goes up, GameStop shareholders will benefit. And if it goes down, this company will still have a strong balance sheet because of its huge cash reserves. I wouldn't buy GameStop because of its Bitcoin portfolio, but that's not a reason to sell this stock either. Its Bitcoin investment seems like a gimmick to me, but a potential Bitcoin rally is also an upside risk for short sellers. I mean, if Bitcoin goes up a lot, it's, I don't know. It doesn't seem like risky. It's interesting, though. GameStop is reducing costs by closing stores. GameStop has been reducing its operating costs by selling and closing many of its stores. In its 10Q filing, it reported that it sold its Canadian subsidiary and its French stores in 2025. It's also been closing stores in the US. The company's falling store count explains why its SG&A costs are falling, and it partially explains why its revenue is falling as well. And at least he made a mention of it. Most people don't make a mention of the stores closing is the reason why the revenue's falling. So at least he made a mention of it. The new GameStop is a more efficient company and will have a stronger margin in the future. It'd be more appropriate to use its current margins rather than its historical performance to project its 2026 results. But in a situation like this, where a company is selling stores and closing them down, I'd also project that its revenue will fall as well. I don't think they're closing stores as much anymore, but they're probably still closing stores. Another thing I haven't seen anyone talk about is how they added like 90 million to their merchandise and inventory. How come nobody talks about that? Like, I feel like that's a pretty important thing. GameStop's warrants are unlikely to be exercised. The 10Q filing also says that in October 2025, GameStop issued warrants to both its current shareholders and its note holders. These warrants allow their holders to buy GameStop stock at a price of $32 per share, and the company could issue as many as 59 million new shares this way. The warrants also expire in October 2026, but GameStop's stock price at the close on December 10th was $22.12 per share. So if a huge rally doesn't occur, it's likely that many of these warrants won't be exercised at all. Well, they've already exercised 4,422. You can thank the two, yours truly. I gave GameStop a whopping $64, baby. The main risk is that GameStop's pivot will fail. Again, GameStop is becoming a store where customers can trade collectibles instead of just a video game store. Its short-term results indicate that this strategy is working, but the company might be benefiting from fads. In the 1990s, there were several collectible fads, such as Beanie Babies, Tickle Me Elmo dolls, and Furbies. It's possible that GameStop's collectibles won't retain their value in the future, especially if manufacturers overproduce them. Yeah, that's a good point. I just don't see like Pokemon going anywhere, honestly. I really don't. Comparative valuation for GameStop. It's hard to identify direct competitors for GameStop, so I'll compare it to Build-A-Bear and Best Buy. There's also no analyst coverage for GameStop, so I can't use forward EV/EBITDA here, like I do with other stocks. But the estimated value/sales of non-GAAP PE ratios for GameStop are available, so I'll use those instead. According to Seeking Alpha, GameStop had an estimated value/sales ratio of 1.46 after the market close on December 10th, and a forward PE of 23.34. On the same date, Best Buy had a forward EV/sales ratio of 0.44 and a forward non-GAAP PE of 11.54, and Build-A-Bear had a forward EV sales ratio of 1.43 and a forward non-GAAP PE of 13.04. While GameStop's margins are quickly improving, it does appear to be trading at a premium compared to the most relevant companies I could use for this comparison. Valuation for GameStop. GameStop's revenue fell 4.6% this quarter, and its second quarter results may have been an outlier. Why doesn't he say why? See, these people who are writing these articles on GameStop, they're not tapped into the full story, because the reason why the second quarter was an outlier was because of the Switch 2 release. If this guy had any knowledge on gaming, he would know that. So I'll project that its Q4 2025 revenue will drop 4.6% from $1.283 billion to $1.224 billion. Just because Q3 had a 4.6% drop, you think Q4 is as well? I don't agree with that at all. GameStop's revenue for the first 3 quarters of 2025 was $2.523 billion, so its full year 2025 revenue would then fall 2% to $3.747 billion. See, I don't know about that. Maybe, though. We'll see. It's trickier to estimate GameStop's net income because this company's net income is higher than its operating income. It's earning additional interest income, and it also owns a Bitcoin portfolio that varies in value. In Q3 2025, it reported operating income of $41.3 million and adjusted operating income of $52.1 million. So I can estimate that its adjusted net income would also be about $10 million more than the GAAP number on the balance sheet. The company reported $10.7 million in asset impairments that reduced its operating income. So if I use GameStop's Q3 GAAP revenue of $821 million and adjust its net income upward by $10 million, it would have $87.1 million in net income and a net margin of 10.6%. Then for 2026, I'll project that GameStop's revenue will fall another 2% to $3.672 billion, while it maintains a 10.6% net profit margin for the full year. The company's net income for the year would be $389 million. It's trading at a premium compared to its peers, so I'll project that its PE will drop to 22 in 2026. So my estimated market cap would be $8.563 billion. GameStop's third quarter 10Q filing says it currently has 448 million shares outstanding. So if I divide a market cap of $8.563 billion by 448 million shares, I get a 1-year target price of $19.11 per share. GameStop's price after the close on December 10th was $22.12. So my estimate projects 14% downside. This scenario is based on what I think is most likely to happen in 2026. I could also consider a more optimistic scenario where GameStop's collectible business performs very well in 2026. In this scenario, I'll project that its revenue will rise 10% from $3.747 billion in 2025 to $4.122 billion in 2026. With a 10.6% net margin, its net income would then be $437 million, and with a 22 PE, its market cap would be $9.614 billion. If I divide the market cap by the shares, my 1-year target price would then be $21.46 per share. That's 3% lower than GameStop's market price of 22.12%. That's crazy that he's only estimating $437 million, though. Or 300 and whatever he said up here. 370, what did he say? 389 million? Like, that's crazy, because I'm expecting like 5 to 600 million. Because Q4 is going to be massive. So, see, I don't think this guy understands the gaming industry or GameStop's business. He's just making assumptions. The most recent articles from other Seeking Alpha analysts say GameStop is a hold, and my analysis indicates that it's a hold as well. The company's bottom line performance is likely to improve significantly in 2026 because of its reduced store count, but it looks like that this factor may be priced in already. And again, it could be risky to short this stock because it has nearly $8 billion in cash that it could spend on buybacks. But I also expect GameStop's PE to fall because it's higher than peers' PE ratio. What's up, Moose? How you doing, bro? Conclusion, GameStop has become a much more efficient company by selling off some of its international stores and closing some of its stores in the US. It also appears that the company's pivot from video game sales to collectible sales is succeeding as well. So this appears to be a successful turnaround, and GameStop, unlike other companies, has a lot of cash that it can use for buybacks if short sellers go after it aggressively again. This would be a risky company to short, but other stores might offer better opportunities for longs, so I'd say GameStop is a hold. Interesting. That was a good article. I liked that one. That should be a good little stream clip as well. That should be a good little stream clip. Picked up a few shares. Nice. Me too. I don't have much more cash for buying shares, but I did sell some shares on the way up in the last run, so I have some cash. I'll probably go all in if it pushes the 20s, but we'll see. Not like it really matters at this point. I have way too many shares. Way too many. I'll buy 200 worth of shares in honor of Moose. Nice. Was thinking of waiting until 20 if it said whatever. Yeah, I don't think it really matters, you know. You're looking out 5, 10, 20 years. There's no difference between 21 and 20. And the overall market's down today, so I would expect that being the drag on GameStop. Market's down, crypto's down. Crypto's down a little bit. Mostly the market's down, so, you know, if you have an update on the market, maybe you'll see some upside on GameStop, maybe, who knows? Who knows? Wow. This is a slow stream, bro. This might be the slowest stream we've ever had. Straight up. This might be the slowest stream we've ever had. This is crazy. Dead stream, son. Dead stream. But there's really nothing to... Well, it is Friday, so that makes sense. Fridays are usually trash. I probably shouldn't even have streamed today, but I want to keep hitting those stream clips. So, it is what it is. It is what it is. How did those, how'd Broadcom... Where's Broadcom at? Wow, Broadcom's down 11%? Holy shit. That's massive. That's pretty insane. That is pretty insane. It's crazy, bro. It's crazy how many people are bearish. It's actually insane how many people are bearish, bro. It's absolutely insane how many people are bearish. Like, we had like 100 people in the stream yesterday, and as soon as Broadcom started dropping, we had like over 200. And it was like all bearish people. That shit was crazy, bro. That shit was crazy. I hope these earnings streams for the regulars, for the people who watch this stream consistently, I hope the earnings streams show you guys why I hate the stock market so much. And why I hate, like, Wall Street people so much. Like, they are just, like... Wall Street people are the worst, bro. Wall Street people are the absolute worst. The clip of Ryan Cohen at the end was funny. Oh, the GameStop awards? I thought that was pretty funny. I don't know. GameStop's an interesting investment, no matter how you look at it. It's just, maybe a matter of time, who knows? I don't know, man. Dude, what is up with the stream? Maybe we don't stream on Fridays, that's crazy. This is insane. That one dude tossed like 200 at you. I was lolling, happy that happened for you, bro, and hopefully it keeps happening. Oh, That sub helped. I wish I would get the full subs because I only got like 120 of it. He donated like $260 and I got 120 of it. That shit sucks. But that I appreciated that a lot. Straight up. I really appreciated that. Like, it's been a struggle. The past like couple months have been a struggle. I've been thinking about getting like an actual job just because money has been so trash. Like, I'm not making really shit off YouTube anymore. I don't really get many flips anymore. Like, I got some decent flips from GameStop's Black Friday sale, but not much. Like, all my money's in GameStop, so I'm not making money off bonds anymore. So it's been tough. It's been a struggle. It's been a struggle. But, you know, hopefully the sacrifice is worth it, you know. Hopefully the sacrifice is worth it. Hey, Aaron, what's up, bro? Need your help turning the market positive, pump it up. Unfortunately, I can't. I can't. All these AI stocks are too overvalued, and maybe the market's finally catching on. So I can't. Oh, man. The rotation right now is crazy. The Dow at all-time, well, not anymore after today, but the Russell and the Dow hitting all-time highs while the S&P and the NASDAQ are lagging. Like, the rotation is crazy right now. Usually the rotation isn't that obvious. But you're just not really getting in a... You just have a lot of negative sentiment on GameStop, I guess, still. So people are rotating into, you know, like retail type businesses and stuff like that, but people are ignoring GameStop still, and that's awesome. Stream on the off chance Small Fridays makes an appearance? Nah. I don't even remember the last time Small Fry was here, bro. I just wanted to hit that stream clip, realistically. The stream clips, although they haven't been getting like massive views, like nothing crazy, but the fact that they're getting views at all, you know, and people are commenting, like people are commenting on them as well. Though it's not, you know, it's not thousands of views or anything like that. I still want to keep the stream clips going because, I don't know, it just gives people something to watch, realistically. More potential eyes on the channel, whether they come into the stream or not, you know, probably not, but like, I just want to keep the stream clips going, for now. Because like, this one stopped getting views, the earnings highlights. I don't know if this one might be dead at this point, because nobody probably cares about earnings at this point. That was 3 days ago, 4 days ago, so people have goldfish brains, so they probably don't care about that anymore. But the GameStop Awards one was doing okay, but goldfish brains, it's not getting views anymore. But this one I just posted about the do not buy GameStop if you want to sleep well at night. This one's doing okay. So I want to keep posting the stream clips. And of course, the GameStop Power Pack shorts are still doing decent, so I'll keep posting those until I don't have any more. And yeah. So I just want to try to keep uploading consistently on the channel and see where it takes us. Probably won't do anything for me, probably doesn't matter, but we'll see, you know. It's all a matter of time and consistency. Consistency is very important with this YouTube shit. Comment in the top corner, people actually did that with the warrants. Yeah, bro. I exercised too off my... Well, I didn't exercise them, but I sold them back to GameStop, and they didn't give me like money for the warrants or anything, so they probably just exercised them for me. Because I think it was supposed to be 4,420, but because of the 2 I exercised, it's 4,422. And the only reason I did that was because on Computer Share, if you wanted to exercise your warrants, it was like a $10, $15 fee or something like that. And I was like, I'm not going to pay $10 to exercise 2 warrants. Like, I'm just not going to do that. So I just sold them back to GameStop, and they probably exercised them. So yeah, every time you see those 2 shares, know those are mine. Those are my shares. Those are my shares. Is YouTube all about just SEO and getting your stuff in the algo? I think it's all about consistency and getting people to build habits of watching your videos. Of course, you know, SEO and like all that stuff's important. You know, the more the algorithm suggests your video, the more likely people are to view it. But I think it's just all about getting people's habits. Like if someone's habit is to watch you every single day, I mean, that's awesome. Like, I would rather have a few people that are like down to watch every single day than a bunch of people who just watch whenever I post like a banger or something, you know? It's kind of like the power pack thing, you know? I post a power pack video, that's going to get views no matter what. But how many people have joined the stream because of power packs? Literally nobody. Literally nobody. So I think it's just all about building people's habits to watching your stuff. And, you know, also creating content that people actually find useful or entertaining. And I don't really know what content to make right now that's entertaining, so I'm trying to make content that's useful. And I think reading articles is useful because not a lot of people have the time to read articles. So, you know, they could just pop my video up and listen to the article rather than reading it. But yeah, I really think it's all about building people's habits. I really think so. And I think it shows with other people's YouTube channels as far as like the GameStop community goes. If those people aren't view botting, which potentially they are, you know, it seems very likely that a lot of the people in the GameStop community are view botting. But if they're not, it's just because they have years of people watching their channel, you know? I've only been doing this for a year, and I haven't really been consistent about it. Like, there's been moments where I've been consistent about it, but there's also been, you know, I went like a whole month without streaming or doing anything multiple times. So if you're uploading consistently every single day for multiple years, you know, that could be the reason why people's views are so high, even though they make shit content, or they're view botting. Who knows? You know, who knows? You can't really prove anything, but yeah, I really think it's just all about making content consistently for a long time. Cordell ruined the 420 setup. Yeah, that's the only thing I can think of, because yeah, I had those 2 warrants on my Computer Share and got rid of them. So that's the only thing I can think of where they came from. And I don't think there's as many long-term GameStop shareholders as it seems. I really don't. I think a lot of people are full of shit, but it's all good. It's all good. You kind of made the 10Q. Yeah, I like the 10Q. I like the 10Q. Break Nation from Power Packs? I don't think so. I think Break Nation was here before that. But yeah, that's the plan going forward. Just try to stream and make videos consistently and try to make money potentially. Because I could go get a job, just some random job, making like $15 an hour, but that shit would suck. It would be nice, it'd be nice to make like $1,000, $1,500 a month, but I'd rather put my effort towards this, even if it doesn't work. I would just rather put all my effort towards this. And the likelihood of it working is very low, like less than 1% probably. But I've worked with enough people and done enough things, and I gotta do something for myself, even if it doesn't work, even if I regret it in the future. I think I would regret more going and getting a normal job and having more money to invest in GameStop. I think I would regret that more than trying to build this, even if it doesn't work. Of course, if GameStop works out, sure, I should have probably made more money and invested more, but if the YouTube channel works out, which so far it hasn't worked, I mean, it's been okay. It's been okay, but I would rather take the risk of potentially doing something for myself, if that makes sense. And believe at this point it is pretty risky, but I'm committed to the risk. Streamer Burnt Peanut could be an inspiration. He tried streaming in 2022, quit for a few years, came back this year, I think, and is now massive. Yeah, that's awesome, man. That's awesome. We'll see if that ever happens for me. I don't expect it. I don't really see it. I just know how to get there potentially. I'm not a relatable person. I think that's my biggest issue, or like my biggest problem. I just don't think I'm that relatable. I don't know. I don't know. I don't think I'm relatable. I don't think I'm really likable. So I think there's, a lot of barriers keeping me from getting to that point, but it is what it is. People don't care about that, you don't think? You don't think? I mean, I guess they want an escape from their routine. They want a distraction. Yeah, that's a good point. That's a good point. That's a good point. You're right. They just want something to watch. I mean, all the YouTubers I watch, for the most part, they just talk to the camera. Like, I don't really watch, personally, I don't really watch, like, I'll watch Mr. Beast sometimes, but I don't really watch videos like that. A lot of the videos I watch on YouTube are just people talking. So, I guess you're right. I guess you're right. But also, maybe the GameStop community isn't as big as people think it is. Maybe a lot of it is bots. I don't know. Who knows? Who knows? It's definitely possible. Could also be a lot of foreign people. That's a possibility as well. There's a lot of foreign people in the stock market. But yeah, I just want to keep doing what we're doing, and eventually maybe transition to talking about other stuff, but this is just what's working right now. I just know if I start making content around like what everyone else is talking about, like, I don't know, I could find any random article right now. Like, I could find, I don't know, like, there's so many articles, you know? It's tough to, for one, it'd be tough to find one to actually make videos about, but like, say I made a video about Markiplier's movie getting picked up by AMC. There's probably 100 YouTube channels making a video about that. Like, it doesn't stand out, you know? It doesn't stand out. Whereas at least if I'm making, like, GameStop article videos, nobody else is doing that. You know, someone's probably going to steal it because there's a certain YouTuber out there who steals literally every fucking thing that I do. But in the meantime, nobody's doing that. So not having competition is awesome in the world of making content. I'd definitely be streaming games or something like what Asmongold does, React type shit, and have GME be a topic, not the focus. So that goes about with what I was just talking about. Everybody's gaming. Everybody's talking about the same topic. It's hard to stand out if you're doing content like that. Of course, you know, there's endless amounts of content, but it's hard to stand out. Like, I'll give you a perfect example. Because there was that Disney OpenAI news yesterday or 2 days ago. I can't remember. But if we search this, Disney OpenAI, and we go to upload date by this week, some of the bigger channels have a lot of views. But even Bloomberg, only 3,000. Like, Bloomberg's, obviously these are all the bigger channels, but if we start to scroll down, some of these actually have decent views, so I guess maybe I'm being a hater, but let's see. Maybe I gotta sort it up by view count. That'll be more accurate. So we sort it by view count. You know, this guy got 44,000 views. That's awesome. He crushed it. CNBC got 18,000. This guy got 15, 12. But, you know, those aren't important. Those aren't important. We scroll to the bottom. This is the point I'm trying to make. Look at all, I mean, we're not even at the bottom yet, but look at all these videos talking about this one topic. All these videos talking about this one topic. Like, it's tough to stand out, bro. How can you stand out from all these videos? We're almost at the bottom, potentially. Like, how are you gonna stand out from this? Look at, I'm still scrolling! We're at channels that literally have no views, and I'm still scrolling. Like, it's gonna be tough to stand out if you make content like that. That's why I focus on the GameStop content, because there's no competition. All my competition is a bunch of fucking hype men, basically. A bunch of people that have no fucking clue what they're talking about. A bunch of traders who don't even make money. Like, my competition in the GameStop space is, like, it doesn't exist, honestly. It really doesn't exist. But look at this, man. No view, no view, no view, no view, no view, no view. Like, like, all these videos have no views. Like, you're just not, it would be tough to stand out in this space unless you already had a solid following. And, like, I have a decent following, you know? I have a decent following. But it's not enough to stand out in a space like this. You know, it's just not. It's not enough. It's really not. Like, there's so many videos, dude. And sure, you know, I could be one of the first ones to make the video about it. Sure, potentially that would work, but still, there is just too much content around all this mainstream news. Everyone's trying to be a content creator. So it's nice to have a niche. It's nice to have a niche. Even if it's not the biggest niche and it's not really that, it's not really a community I personally would choose to try to make content for, but at least it's there, It's something I'm interested in. It's a topic I know probably more than 99% of people. So it's an easy topic to talk about. Like, there's a lot of benefits to making content around this. But there's also a lot of negatives. There's definitely a lot of negatives as well. Don't get me wrong. I saw Trump is doing something with weed stocks. I didn't read into it. Let me see. Expected to sign executive order to reclassify marijuana as soon as Monday. Cannabis stocks jumped on Friday as the White House prepared to significantly ease federal restrictions on marijuana. Weed producers Tilray and Canopy jumped more than 40%. Cannabis greenhouse operator Innovative Industries surged 10%. And the cannabis ETF rallied 51%. Trump is expected to issue an executive order as soon as Monday that would allow for reclassification of weed, a source familiar with the matter told CNBC. Such a move would allow cannabis companies to fall under different tax regulations and encourage investment. The Washington Post first reported on Thursday that Trump was expected to use an executive order to instruct federal agencies to reclassify marijuana as a less regulated Schedule III drug from a Schedule I, out of a group that includes heroin and into a low tier of less dangerous drugs such as steroids and Tylenol with codeine, would take place earlier next year. Trump previously floated a change in marijuana's classification in August. Trump rescheduling marijuana was not an if in our assessment, but a win. Grohan said the report change would be positive for the cannabis industry. If Trump orders cannabis to be rescheduled, Grohan anticipates the Drug Enforcement Administration would finalize a proposed rule for the reclassification by the summer. Bill Kirk, senior research analyst at Roth, said he's also monitoring whether the Supreme Court decides next week to hear a case on state regulations and federal prohibition of cannabis. A positive ruling for the industry in that case could speed up regulatory timelines. The industry sees the latest moves as a sign of progress to normalize pot under national law. I'm a lot more optimistic than I've ever been, Tilray CEO said. Sean Hauser, partner at cannabis-focused law firm, said a reclassification would mark only a partial victory, as the sector would need to continue fighting for legalization. However, she said the momentum can press Congress to create a regulatory framework that offers broader changes around safety, access, and criminal justice reform than what a rescheduling provides. This is the beginning of the new This is the new beginning of a new era of public health safety, or health policy. Holy shit, I can't read. If implemented, it dismantles nearly a century of outdated drug policies that fly in the face of science and medicine. Pot stocks have struggled since a brief mania around public growers and dispensaries in the years before COVID, even as cannabis has received broader acceptance and easier state classification. Okay. I wanted to read about that a little bit. Kind of interesting. What do you guys got going on this weekend? Anything exciting? Anything going on? Cause I'm probably gonna get out of here in a little bit. There's just not much to talk about. It's Friday, you know. It's Friday. Fridays are, I mean, I can see it by the views, but yeah, Fridays are pretty dead. cookie decorating party tomorrow. That sounds awesome, bro. I love that. That sounds like a good time. I bought a Game Boy Color from this dude on FB Marketplace, and he has invited me to hang out and play some N64. Oh, hell yeah. That'll be fun, bro. That'll be dope. Let's go. That's going to be a good time. I like that. Hopefully he has, like, Conkers or something. Conker's Bad Fur Day. That's a good game. Or a trap. It's a trap. It's a trap. Hey, at least he didn't invite you to watch Prawn. I used to talk to this random guy in the sauna. Luckily, he's never there anymore. But he, like, asked for my number one day. And then next thing I know, he's texting me and he's, like, asking me to come watch fucking Prawn with him. And I was like, bro, what the fuck is wrong with you? I mean, I didn't say that, but I was like, no. And then I never talked to him again. Because I thought that shit was weird. That's forward as hell. Dude, I thought it was weird, bro. I thought it was extremely weird. So at least he's inviting you to play N64. At least he wasn't like, hey, you want to come jerk off on my couch with me, dude? You want to come jerk off with me, dude? Me and my friends are doing it, dude. We all jerk off with each other. Yeah, that was a weird moment in my... part of the reason why I don't talk to anyone anymore. I was like, oh, I literally can't talk to anyone. Literally can't talk to anyone. Can't talk to dudes because they're gonna try to fuck you, and can't talk to girls because they think you're trying to fuck them. It's weird. I live a weird life. I live a really weird life. That's why I'm just a recluse. That's why I just live under a rock. But might as well just play OSRS. Hey, that's a good idea. I haven't touched that game in a while. I would love to play some OSRS again, though. Not anytime soon, but I'll definitely get back in there. I'll definitely get back on the OSRS grind. Just don't know when. You think OSRS videos would be a flop? Yeah, I've made a bunch of OSRS videos. Especially now. Like, there was that moment in time before everyone from World of Warcraft and stuff switched over. There was a moment in time when RuneScape really wasn't popular at all. Like, not even 6 months ago, I would say. And you probably could have made videos and streamed and really not had much competition. But now, there's way too many people doing that. But I've also made a bunch of RuneScape videos in my lifetime. And they do okay, but there's already so many RuneScape videos out there. There's so many. I mean, that game's been around for fucking ever, dude. That game's been around for so long. That's actually some of the first videos I made on YouTube were RuneScape videos. Long time ago. If only I knew what I knew now, I would have kept making them. But I never really took it seriously. I just did it for fun because I thought making YouTube videos was cool. But I never took it seriously. I want to read this real quick, and then I'm probably going to get out of here. Do Kwon, co-founder of Terra USD and Luna, is facing 15 years in prison for defrauding investors, what judge calls a generational scam. In May 2022, crypto token named Luna experienced a massive free fall in the market, plummeting in value from $87 per token to less than a cent. More than 3 years later, the crypto tycoon behind the coin has been sentenced to 15 years in the clink, with a judge presiding over the case dubbing his crime as fraud on generational scale. South Korean businessman and software engineer Do Kwon was the co-founder and CEO of Terraform Labs, the company that owned Luna and his accompanying stablecoin Terra USD. Once touted as one of the strongest cryptocurrencies on the market, Luna's fall was nothing short of a financial avalanche, and years later, Kwon's paying the price. Kwon fled South Korea not long after Luna's crash. He was arrested in Montenegro for using a forged passport to travel to Dubai in March 2023. After this arrest, he was extradited to the US, where was placed in front of a grand jury that charged him with 8 different counts of fraud. He pled guilty to 2 of those counts, apologizing to his victims of the fraud and saying, "What I did was wrong." He was formally sentenced to 15 years in prison in December 2025. Presiding U.S. District Judge Paul A. Engelmeyer gave a scathing description of Kwon's crimes in the courtroom, calling them fraud on an epic generational scale. In the history of federal prosecutions, there are a few frauds that have caused as much harm as you have, Mr. Kwon. Luna was reportedly valued at a peak of 50 billion USD before the crash in 2022. Afterwards, reports claimed that around 45 billion was lost. Kwon isn't the only South Korean crypto fraudster to get arrested recently. In August 2025, an alleged crypto scammer was caught after he brought in for littering, facing 10 criminal charges due to scheme that reportedly defrauded 1,300 victims out of 17.7 billion won. All right. All right. All right. Well, unless you guys got something, I'm probably out of here. Unless you guys got something, I think it's time to hit the dusty old trail. 40 billion to 0, that's impressive. Or 50 billion. I think it's impressive that a shitty crypto coin can get that high of a market cap. And GameStop's sitting at 10 billion. Like, that's crazy. That's crazy. Any news on the Bury? He's posted a few things on Twitter and a couple more articles on his Substack, but they're locked, so unfortunately I can't read them. But he's posted some things on Twitter. I could read a couple of them real quick. We could check them out real quick. Then he tweeted he would drop a GME update in December. Yeah. A lot of people are speculating it's going to be on Christmas. I assume Christmas Eve, most likely. Wait a second. Larry Cheng interview? No. A Larry Cheng interview, bro? No way. Larry Cheng? How do we watch this? Where's this Larry Cheng interview, bro? How do we find this? Larry kept going. I just dropped a new episode with him. Insights are fire. How do we... Ryan Hanley, Larry Cheng. Oh, shit. Larry! Hell yeah. Hell yeah. Larry Cheng interview, bro? Shit. I'm changing the title of the stream real quick. Larry Cheng! Well, it looks like I'm not going. I guess we're gonna watch Larry real quick. Larry! See, good idea. That was a good idea, bro. Good idea to check Twitter before we go. Good idea to check Twitter before we go. Now we actually have something to watch. That's awesome. That's awesome. I need to put some tags on this. Larry Cheng interview. Larry Cheng. One sec, let me get these tags up and going. What else can we do for tags here? Okay, there we go. Larry.
My philosophy.
Right this way. Whoa! Wasn't expecting the full trio.
My philosophy.
All right, hell yeah. This is another stream clip right here too, I think. Potentially another good stream clip here. This only has 65 views 2 days ago. What? Hey, Muma commented. When the boogeyman goes to sleep at night, he checks his closet for Larry Cheng. How does this only have 65 views? That just goes to show how many bots are on fucking Twitter, bro. Because when Larry does a live stream on Twitter, there's like thousands of people in it. Crazy. Crazy. All right, I guess we're watching this. How has that been out for 2 days and no one's seen it? Wild. Yeah, that is wild. Very wild. All right, we got a Larry Cheng interview. He's part of GameStop's board. Shout out to Ryan Hanley for the interview. Let's get right into it.
My philosophy is you try and turn the long maybes into a quick no. That saves you time. Every firm has a fit. It's the type of deal that's in their comfort zone. You want to assess whether you're a good fit. You could spend 2 months and it's not a good fit at the end. So I try and make it easy for people to turn me down. We might not be the right stage. We might not be the right sector. Maybe we don't have enough proof points. Let me tell you all the reasons you can turn me down. I will not take it personally. Try and encourage the no, and that will save you time because
the place that I wanted to start with you is actually a tweet that I found from a few weeks ago. It's just something that intrigued me, and I was wondering where it came from. You said, just a thought this morning, a personal philosophy applicable to selling, fundraising, etc. Don't take no's personally. Don't take yeses for granted. I love I think you're dialed on that. And just interesting where that came from and kind of how that applies to both the businesses you run and the businesses inside your portfolio.
Yeah, so let's go there. When we started Volition Capital, we're a private equity firm specifically focused on growth, and we had to raise a fund. And a fund is made up of different investors, very institutional, like university endowments, big charitable foundations, wealthy family offices, and so forth. And when we first started this firm in 2010, it was 2 years post-financial crisis. No one wanted to invest in a new emerging firm. They wanted to even cut their allocations to this asset class and only stick with the firms that they knew. And I put my head down. I talked to 200 different investors, and they didn't even say no to me. Most of them ghosted me. And in my world, the investors are called limited partners, LPs. And the reason they ghost you is because they want to see if you can raise your fund and get close to your target, and then they can come in at the finish line. And I didn't take any of those turndowns or ghostings personally because honestly, I understood. We are a new firm. There are reasons to not invest with us. It's a long-term commitment. It's like a marriage. And I didn't take it personally. And somewhere in like 200 to 210, someone actually committed. And that started the ball rolling. And we got a few more investors, and we ultimately raised our first fund. In our first investment out of that fund was Chewy, which became the leading pet food e-commerce
Chewy,
business, which I'm sure
baby!
we'll talk about, multi-billion-dollar
Chewy!
exit. And we've been off to the races the last 15 years. And so now we're sitting here where we are 15 years later. And I still don't take turndowns personally, because there are going to be times when certain investors, they can't invest or it's not the right fit, and that's A-okay. And we certainly don't take for granted any investor who wants to invest in us, because we know how hard it is the first time. And so you always treat your LPs, your investors well. You care about what their needs are. You're transparent with them and all that good stuff. And so that's always been my philosophy. I thought it applied even just to selling at anything. It seems like a healthy philosophy to go after it with.
Yeah, I completely agree. So 200 meetings before you got your first yes. I mean, even if you logically have this, don't take no's personally, like I might say detach from the outcome, whatever way you phrase it, right? Like, even though logically we can sit here and go, yeah, detach from the outcome, like, you get banged over the head 200 times or ghosted, there's a little bit like, how do you, I think a lot of people would give up before they would hit 200 meetings, without a yes. Like, there had to be moments in there where maybe you were questioning your investment thesis or who you were going after. Like, how do you stay committed to the mission to get to that point where you hit that 201st meeting and you get that first yes, right? Like, how do you emotionally work through that? Because I think that's
a good
where
question.
a lot of people, logically,
Really
I think
good
we
question.
understand, but emotionally seems to be where we break down.
It's not that you don't learn along the way. It's not that you don't try and improve your story and react to what you're hearing. But there was no fundamental questioning of what we were doing, and no fundamental question of the strategy. The strategy that we were talking about then is the same strategy we're doing today. I think it's just maybe there's a little bit of context that, yeah, there are valid reasons to not invest. There are valid reasons to wait. And you don't need to take any of that personally, and just keep going. And actually, when I got my first job in this industry in 1998, I was 2 years out of college. I was in consulting, and I was trying to break into this industry. And I kind of told myself the same thing. I said, I'm going to reach out to 100 people in this industry by any means that I can. And I am not going to worry about the response. I am just going to get to 100 people, and then we'll think about it. And ironically, I got to 100, but someone in the first 10 actually gave me a job, and that's how I broke into this industry, in 1998. So,
what was it that initially attracted you? Like, what was the thing that said, this is where I want to be, this is where I want to build a career?
Oh yeah, so I was in consulting at a Bain spin-out. We were doing growth strategy advice to Fortune 500 companies. On the side, I was trading penny stocks, and I was trying to make a buck. And I put all.
I didn't know Larry Cheng was a penny stock trader.
Penny stock that was
That's
doing
crazy.
Broadband wireless, and I had convinced half the firm, my consulting firm, to invest in this stock. It was called Cellular Vision USA. I still remember it, and it turned out to be a total bust. But what I realized is I like the scorecard of investing. I was an athlete. You like to win or lose. You know if you're right or wrong. I think that's fun. It motivates me. So that was fun. I liked tech. I liked innovation. So that was fun. And that got me into investing. I started venture capital at Bessemer Venture Partners. And I haven't stopped having fun ever since. It's been 27 years. I work with phenomenal entrepreneurs every single day. And it's a lot of fun.
Yeah, I'm with you. My hobby outside of what I do, and it's more than a hobby because obviously you're playing with money, is I still love looking at the pink sheets. Like, I still love.
I hear you.
There's I won't say the company, but there's a psilocybin company in Toronto that I caught at like 30 cents right when the first research started coming out that psilocybin could be really good for PTSD and particularly soldiers. And I was like, you know what? Like, I've had a really good experience with psilocybin, my own experimentation, we'll call it, or supplementation, maybe. So It doesn't sound like I'm
this guy's getting high, dude.
And I was like, there really is something to this, right? I had very positive results. So I was like, screw it. threw like a couple $1,000 in, you know what I mean? Like, again, they're all just like Powerball tickets anyway. So, you know, and then this thing goes from like 30 cents to $9.
Yeah.
And you're like, holy you know what I mean? And this was probably like 10 years ago, like right at the very beginning of this move.
A few thousand in a penny stock's
but
crazy,
it's
bro.
intoxicating. But like you said,
That's wild.
There's 10x the losers, right? So, you know, one of the things that I've always been really interested in philosophically, you hear this a lot with VCs. I think with venture firms and stuff, it's maybe a little less. But it's we're going to place 20 bets and hope one of them goes big because we figure the other 15 of them are going to go to zero. 4 will be maybe get our money back, and then 1 we have. So when you're like, I'm really interested in that philosophy, right? Like, because every bet, and just taking this kind of arbitrary example of 20 companies or whatever, right, portfolio. Obviously, when you're going in, you must believe that each company has the potential to be that Grand Slam winner, but you know they're not. Like, how do you sort through those and work through? Because I think a lot of people who are listening to this who maybe haven't raised VC capital or dealt with a large fund, like, you hear these things, maybe you hear about something on, you know, on one of the, you know, CNBC or on a news story, but it doesn't, I think a lot of people just don't understand how this side of capital raising actually works and like what you guys are thinking through when you're considering companies.
That's a great question, Ryan, and I think it's an important thing to elevate to all of
That's a good idea, bro.
First, let me say there are different asset classes within private equity. Venture capital is the early stage group.
That's a really good idea. I don't know how I'd get his email. If you know a way to get it, I'll definitely do it. That'd be awesome to interview Larry.
Where I sit, Volition Capital is growth equity. It's investing in growing businesses with revenues and so forth. And then there's buyout, which is large companies, like levered transactions to go buy them. You're right. Venture capital is what we call a high loss rate asset class. They lose money a ton. It's about 70% of the time. And they try and make it up on the one big winner, exactly what you described. I think it's really important before you take venture capital dollars to understand that reality. That is the underwriting philosophy of the firm. Growth equity, we tend to lose money maybe 20% of the time as an asset class because we're investing in growing businesses. We don't want to lose money. And in some sense, the upside is a little bit less than the huge home runs that you might experience in venture. But where there's a conflict, I think, and the entrepreneurs need to understand this, is if you take on venture money, that partner who you're working with, that firm that you're working with, if they're good at their job, will lose money about 60 or 70% of the time. There's no difference in loss rate between a really great venture firm and a mediocre one. The only difference is how much they hit the home runs. And so all of the advice that you're going to get from an early stage venture firm is to go for the home run because that is their business model. So it's going to raise as much capital as you can, invest it as aggressively as you can, grow as aggressively as you can. And if it doesn't work out at the end, so be it, because they have a portfolio. But if you're the founder, that company is your entire net worth. It's your entire life's work. And you have to decide what type of investor mentality you want to bring on. And so a lot of our founders don't want venture dollars because of that very dynamic. For us, we hate the idea of losing money. We understand if we lose money, that means the founders lose money. That means everything that they've worked for, they've lost. That's a terrible outcome. And so we talk about helping founders reach their dreams without risking them. And there's a balance of saying, let's not screw up this whole thing while we go for it, but be aggressive within a range. So it's more risk adjusted where we live, but you're totally right. Venture is a different ballgame. When you have a portfolio, it can work great. When you're the founder, there's risk there.
Are you looking to establish your business
What the
using
heck?
an address other
Random at. Yeah, that would be a good idea too, though. To message a bunch of people. It'd be cool to try to get Nat Turner for an interview. It's a good idea. I'll have to look into it and I'll try to find some of those people's emails and see what we can do.
If I'm a founder,
There's risk there.
so maybe break down if I'm a founder and maybe I'm coming to this, I'm doing my first real raise, right? Outside of maybe a friends and family or someone I know personally, right? I'm going out to a firm I don't know. I'm building a connection. I'm starting to introduce them to my business. And let's say I have a good thesis, a good business, and a good model, right? Something that people will be interested in. Okay. What advice would you give to these founders as they start to think through the set of filters to figure out who they actually want to work with, right? Like you said, there's different venture for the most part is, hey, 20 bets, hope one's a home run. But even inside of there, maybe there's different levels of aggressiveness. I know founders that have been on both sides, right? They took some venture money and then they thought they were getting a partner and all they were getting was money. And then I know other founders who thought they were just taking on money and all of a sudden got someone who's sitting over their shoulder, questioning every decision they make. So how do they start to think through, or is there maybe a framework that you would recommend for figuring out which type of partner is the best for you and what you want to achieve with your business?
Yeah, probably the first question of the framework is, do you need to raise capital at all? You can build great businesses without raising capital. You can bootstrap it all the way, and there have been some phenomenal outcomes. And that the first delineation is that. And what you should feel in your business to raise capital is that you are missing the opportunity, and there's something you could be investing in quite accretively if you had a bigger balance sheet. That you should feel that in your bones. If you don't feel that, maybe you don't need to raise capital. Certainly don't raise capital because your friends are raising capital and you see press releases of companies raising capital. That's the worst reason. But if you feel like there are investments that you are not making, or you're too risk averse with your thin balance sheet to actually make the right choices, then that's where I think you should start looking at it. So let's just say you're in that bucket of, okay, let's raise some capital. Then the question is, what type of underwriting or philosophy of the partner do you want to bring on board? Do you want someone who has the mentality and perhaps the experience of just gunning for it, will help you raise tons of capital, will keep the eye on the prize of a multi-billion-dollar outcome, and you know that there's some risk to that, and sometimes that is exactly, they will take a ton of risk, and they will swing for that 1 in 20 or maybe 1 in 100 shot, and maybe that's right for you, and so that's great. If you want someone who has a different mentality and is going to be more risk adjusted, maybe growth equity is the right partner. And so you start to look within that sort of delineation. Then when you pick one, you look for partners that have sector expertise or value add in the areas that you need, or have portfolio companies that are relevant to your work, have the same philosophy and how they're going to work with you. Are they going to be too overbearing or not? You start to delineate underneath that. But I would say that's kind of the trio of how you would think about it.
Yeah, and I love that you started.
Yeah, I think it'd be a good idea to send them the questions, but if I'm emailing like a bunch of people, I'd probably just send them the link to my YouTube channel, and I have enough subs and get decent amount of views. I mean, this has 65 views, so if Larry Cheng is down to do an interview that's only going to get 65 views, I feel like he would be down to potentially interview with me, maybe. I don't know. I don't know. I'll have to look into it.
This with your story about, you had 200 phone calls before you got your first yes, because that has been my experience raising money, is that in our heads, we're like, oh, I'm going to contact some companies and I'll bring someone in. It's like, nah, 10 names is not enough. You got to be 50, 100. I mean, it takes a lot of phone calls, and it takes that founder, most often the founder, one raising the money, it takes them away from the business quite a bit. Yeah. And, I guess my last tactical question around this, at least for now, is what is your best recommendation for founders who maybe are still operationally, important to the business? They play a vital operational role, and now they have to go raise. How do they manage their time? How do you set your business up so as a founder, you do have the bandwidth to go out and do all these phone calls and take all these meetings? Because I know in there's 2 separate times where I've raised money, it's like months and months of your life. All you're doing is 20 phone calls a week and preparing for them and adjusting based on feedback and, all this different stuff. And you kind of lose touch with your business a little bit if you're really going after this. So how do you set your business up to make sure that you can actually do that and you don't lose the business while you're trying to get money, I guess?
Yeah, my philosophy is you try and turn the long maybes into a quick no, and that saves you time. And every firm has a fit, and it's the type of deal that's in their comfort zone. And you want to assess whether you're a good fit, because you could spend 2 months and it's just not a good fit at the end. And so I try and make it easy for people to turn me down. Listen, I was like, I totally understand. We might not be the right stage. We might not be the right sector. Maybe we don't have enough proof points. Let me tell you all the reasons you can turn me down and turn this company down. And I will not take it personally if you do, and maybe we'll talk to you in the next round and try and encourage the no. And that will save you time, because I'm going to guess that 99% of the time, if you encourage the no and you get the no, that wouldn't have been there anyways had you tried to cultivate it. And so that's where I save time. The right investor will say, wait, time out. No, we love what you're up to. This is a perfect fit. And hopefully that clarifies everything for you.
Yeah, what I love about what I'm hearing from your philosophy is very
Nah, this isn't live, but what's up, P? What's up, Ruben? Hope you guys are doing good.
much an abundance versus scarcity mindset. And I think that's how you have to approach this and probably approach everything. But this line, turn the long maybes into quick no's, like this isn't just fundraising advice, whether it's dating, right? Selling, basically anything associated, getting to know. And this is a very big fan of Chris Voss. I've met him a couple times and gotten to know him in a very small amount. I don't want to pretend like we're close, but his whole philosophy is shoot for no, right? Push for no, because one, no's give people security, right? So part of it is I feel much more confident when you give me an opportunity to say no to you versus I feel like you're pushing me towards a yes. I become much more hesitant, much more willing to go, well, this sounds good. Let me socialize it among my team and I'll get back to you in a month. Like now you're just sitting there in purgatory. So I think it's tremendous life advice, not just fundraising advice. But I think this, like, is it, I guess for me, this idea of thinking through abundance and scarcity, while it feels ethereal I think to some people who are very kind of tactile, it really is a core to where you started, right? If you're not thinking from a place of abundance, you're not going to make 200 phone calls because you're going to think after the first 10, I'm screwed. No one wants this. There's no other opportunities out there. And you have to believe, if you believe in your vision, your mission, or your, in this case, your investment thesis, you have to believe there's eventually going to be someone who agrees with you and wants to come in, or you're almost dead on arrival.
Yeah, I believe in the financial sense that capital finds good opportunities. I believe in the market. And so if you are a good investment opportunity and the market is efficient, it should find you. And now you need to go out, you need to do your work to go tell the story and meet folks. But it's not a question of whether there's a match out there. It's you just got to go get it. And so the more efficiently you can do that, the better. So you kind of have to, I actually believe in the efficiency of markets. I believe if you have a good investment product, when I'm meeting with investors, it's not whether we'll get capital. There's people that should be investing in us, and same with the company and so forth. And perhaps I've been married for a long time, so perhaps in dating too, Ryan, it also makes sense. I don't know. But yeah, you kind of trust the outcome and then just manage the process.
Yeah, I'm with you. I think if you're upfront with who's a good fit and who's not, and believe that there's enough opportunity out there that you will eventually find it, that just becomes a filtering mechanism. Like, I've the first time I raised money, one of the investors that we brought on, like, I wish we hadn't, like, in hindsight, you know what I mean? So it's like we were kind of, instead of providing let's put it, let me frame this the right way. We made what I would consider a classic mistake in that we glossed everything to make it seem right for this particular investor, where I think if we were maybe a little more pragmatic, not that the business was bad. I mean, the business ended up doing fine and everything was good. But for this particular investor, if we had just been kind of,
why did Amazon send me $20,000?
That guy talks too much. He just needs to let Larry talk.
Fully transparent and exactly real with where we were going, instead of like, hey, we need money, like we want to get someone in. I think this person would have selected out, and we wouldn't have had the downstream problems of now the friction of it really wasn't the right investment for them. It didn't really fit what their expertise was. They didn't understand the market, so there was a lot of friction there. And it's like, I was so anxious to get that capital in the door that I didn't put the right filters in place, and then had all this friction downstream that I wish that I didn't had. So that was like a really good life lesson. And just in general for people listening, like the wrong money is almost as bad as no money.
It's worse. I have a couple of thoughts on that. First is the relationship between an investor and an operator or an entrepreneur. I mean, it may last longer than most marriages in this country. So you should be making that choice above everything else on the basis of trust. Like, do you trust this person? Do you want to be married to them in some context? Set aside valuation, set aside value adds, all of that stuff. That's the most foundational thing. You raised something that was secondly that I thought was really interesting. I often ask this question in a first meeting with a company, but you can invert it. The question I ask is, okay, if we go through this entire diligence process with you, what is the worst stuff that we're going to find? What are the worst metrics that are going to bother us? And can you just tell them to me now so I can tell you if it's worth it to go through the entire diligence process? And again, that's a reverse qualification, right? Like, can my firm stomach your greatest risk? Because firms have different personalities. And so in some ways, if you want to reverse qualify again, put out the bad stuff first. Say, here, this is what you're going to find. And be upfront, be transparent, and if they can handle it, great. If they can't, you've saved yourself 2 months of due diligence. And so
completely love that. I call it 8 miling, and I use that in all aspects, in a lot of different aspects of my life. I think it's a good sales tactic. I think it's a good relationship builder. It's good for partnerships, all kinds of stuff. And I actually learned this from a mentor of mine 15 years ago in my first executive position. I was, I got brought along on a lot of meetings as a young professional at the time. I think I was 29 and I was a CMO, and I got to sit in a lot of rooms that maybe technically on paper shouldn't have been sitting in those rooms, but I got to listen in and be part of these conversations. And what the CEO at that time, and he was kind of a slippery son of a gun, but he was very good at what he did. Yeah. And, he would start certain meetings like, here's what this looks like if it doesn't work, right? Like, here's how, if this doesn't work, if we do what we're about to do, we came to sit at this table to talk about, here's what it looks like if everything falls apart. If after 6 months we hate each other, here's how we get out of this. And he would literally start by talking about the end. And at first I was like, it just didn't make any sense to me. I just didn't have enough life experience at that time or business experience to understand what he was doing. But then he explained to me what you're talking about. He's like, if they hate what this looks like, what this could potentially look like in 6 months, I want to know now. He goes, also, it's a backdoor sales tactic because it kind of shows that you don't need them, or that you're willing to talk about the end. And it's almost like an assumed sale. Like, we're going to do business together, but if it goes bad, here's how we get out. Right. And that's where I kind of came up with this, I called it, I go, you're 8 miling them, right? Where Eminem at the end is like, here's all the bad things about me. Now tell them something they don't know, and that's kind of like where I got that from. And, but it's a wonderful, one, I think it does create healthy relationships. Absolutely. And it sets that filter up front. It also is a sneaky, really good way to create that assume.
I feel like Larry's trying so hard to care about what he's saying. But yeah, this guy shouldn't be doing interviews. He needs to shut up and just ask questions. See, maybe Larry would do an interview with me because I wouldn't sit and talk. I would just ask questions. Maybe it's possible.
Sale or urgency mindset of like, oh my gosh, these guys, like, they're sophisticated enough to think about the end first. Like, okay. And that, is a whole different kind of conversation. So I love that.
I was trying to figure out the 8 mile reference. So thank you for explaining that to me.
I've always found that, scene at the end to be like, it's a wonderful scene. It's, dynamic, and they're rapping and all that kind of stuff. Philosophically, and just from a business perspective, I found it's like you've completely taken away when you put all, like you said, put the warts out first.
Yo, this guy needs to like shut up. Like, what is this right now?
Here's the 3 metrics.
I thought this was supposed to be Larry Cheng interview.
If whatever, right? But just in a relationship right now. So I bring up the dating thing. I got divorced 3 years ago. So I had to go through some dating. I'm now seeing a woman. Everything's very good and I'm happy. But like, But dating again in your 40s, I was like, oh my God. Like it's wild, dude. It's wild. It is a wild world, and whatever. It's all good. But the idea is like, if by Eminem, you know, in this scene, for guys, if you haven't seen the scene, basically the idea is at the very end, there's a rap battle, and the best guy.
What's up, Jeremy?
Eminem's going up against
this
guy who's
is
been
uploaded
the,
a couple
top
days
guy in
ago.
this rap
It
battle
only has
for,
like
you know,
60
months or years
views,
or whatever,
which is
and
crazy.
essentially what he does, because the rap battles are usually tearing each other apart, he, in his version of it, basically says all the shitty stuff about himself, right? So he's going,
That's awesome.
you know, he's like, you know, so it's mostly like
Larry's
it's
like,
very
what the
urban Detroit,
fuck
so
am
it's
I
mostly
doing
black
here?
guys, and a lot of these guys use the fact that he's white against him. And he's
Larry
like,
looks
I am
so
white,
uncomfortable.
I am a bum, I am a trailer
I don't know.
park,
Am I
you
the
my
only
mom
one
is
picking up
broke,
on
you know,
this?
He says all this
I
stuff.
feel like
right?
Larry
And
looks so
basically he
uncomfortable.
takes away all the ammo that the other person would use against him. And I said, okay, well, I don't do rap battles, but I would rather, if I'm going to sell something to you, right, say, okay, here's where we're not great. You know,
That's great.
this thing and this thing, you know, other competitors, they might do that better. If those are high priorities for you, then, you know, whatever. But this thing and this thing, we're awesome at. And now by leading with the things we're not good at, like you said, if those are major problems, that person immediately steps away and you don't have to waste your time. It's the
This guy's been talking for like 5 minutes, dude. Like, what the hell? See, that's gonna be my email to Larry. I'm gonna be like, yo, would you be down to do an interview? I won't talk as much as this guy.
quick no that you said earlier. So yeah, you can use it if you want.
That's awesome.
That's how I refer
If
to
you
it.
if you search my tweet archive, since you have already done that, I do have a post which I think is adjacent and relevant, where I say, for good CEOs, they give me the bad news early and the good news late. And what happens a lot is you go to a board meeting or something, and the CEO will say, we're about to sign this, we're about to sign that, and I think we're going to land that and this, and like trying to get you really excited about what might come. And oftentimes those don't come, or you know, it doesn't come exactly the same way. But what's really trust building is when there might be bad news and they come early with it. Like, I'm seeing some problems here, it might turn into something. And they don't tell you any good news until it actually happens. Like, tell it after the fact. And so that's a really trust building posture that I think my best CEOs adopt.
Oh, I love that. That is tremendous advice, guys. If you're listening, that also works, I think, really well with your team, right? When you're having
Yes.
team meetings.
Yes.
Again, it's if trust is important to you, which it should be, right? And in these things, I think when you hide the warts that everyone knows are there, right? It creates this like,
Yeah, I thought this was supposed to be a Larry Cheng interview.
That must be really bad because he's not talking about it, even though we all know, right? Or maybe it's worse than we thought. Where if you just come out and go, hey, we missed our quarter by 3%. Here's the reasons. You know, we're gonna fix this one. You know, whatever the issues are. You know, what's funny is, and you probably see this, is oftentimes when you lead with the problems, again, you 8 Mile them, people will go, oh, I know how to solve that. Oh, you're having that problem?
Right.
Oh, we got this, you know, especially with a situation.
It seems like he's
yours
like
where you have
not
all this
prepared
experience
for
in other
the
companies.
interview.
You know, you're
Seems like he
in a
doesn't
position
even
to
have
go,
like
oh,
questions or
if you're having
anything
that
writing
problem,
or
we got
written
2
down.
companies over here
Seems like he's
that
just
have already
going
solved
for it.
that. You know, either we can connect
Very
you or, hey,
weird.
let's spend an hour. I can show you how to fix that problem. And now all of a sudden, these things that were problems aren't, that you would never know about if you buried that stuff.
100%.
And yeah. I love that. Well, dude, I want to transition to Chewy because I want to talk about this story. So, guys, you were first or early into Chewy,
First investor.
first into Chewy, which is
Yeah.
amazing. And then this is the largest e-commerce exit in history, right? Chewy at the time. Yep. So talk to me about just the process of finding a company. Did you know, or just have a feeling, or hopeful? Like, what is it? Like, what is the experience of being first into a company that then has the largest exit in its sector at that time ever? Like, what does that process from start to finish look like? And how do you navigate that?
Sure. So for those who don't know, Chewy is a pet food e-commerce company, and we invested in the
Mooma in the chat. Larry sipping red bottle 2 days ago. Sell signal. That's so funny.
Sure. So for those who don't know, Chewy is a pet food e-commerce company, and we invested in the company in 2013. We found the company. We have analysts, folks recently out of college who were calling companies, and one of the analysts called Chewy, and I hopped on a call with them, and they said they were trying to sell pet food online. If you don't know, back in the dot-com era, the biggest bust of all of the dot-com companies in 2000 was this company called Pets.com. It had a sock puppet as its kind of mascot, and it was just a huge debacle of like, how can you send 50-pound bags of dog food over the mail and make any money? Like, it's stupid. And that persisted in the venture and growth equity mindset. So I spent some time meeting with them, and what I realized is that the world had kind of changed. And at the highest level, this is a great area to invest, and it's sort of contrarian, is look for big failures, let time pass, and see if those models might work today. And what had changed with Chewy is, number one, there's this whole humanization of pets movement, where people wanted to buy organic, grass-fed, like all the best stuff, whereas we used to buy like Purina kibble in the grocery store, and we don't do that anymore. So basically that bag of dog food got more expensive, which made it more affordable to ship. And then just the proliferation of online shoppers, more pets, like more than half of households have pets. And so the market just got a lot bigger for online pet food e-commerce. And I remember, literally this is what happened. I was in a PetSmart, and I was getting pet food for my dog. And I had met with Chewy, and I knew Chewy was trying to be the low-cost, low-price point player. And I started looking up in this store, I started looking up the price point of the exact same product on Chewy. And Chewy was 30% cheaper than what PetSmart was in store, Petco in store. And I was thinking, it kept happening over and over again. And I knew Chewy's financials in my head, and I thought, wait a second. You're saying that I can just order on Chewy for 30% less, lower price. I don't have to come here, drive here, park, see if my product is even in stock, and carry it home and lug it all home. And it just seemed like a no-brainer value proposition. It's basically a more convenient, lower price point service for exactly what you're already buying. And so we made an investment, and the company grew from, so we met it when they were doing 25 million in revenue, and about the time that we invested, they finished a 70 million revenue year. And they went to 200 million, to 400 million, to 900 million, to 2 billion in revenue, and onwards as a public company. And it was a great success, and much credit to Ryan Cohen and the team who actually took on Amazon in the pet food.
Shout out Ryan, baby. Shout out Ryan.
Having better service for the pet customer.
Here's what nobody's telling you about the new bearskin hoodie.
I miss having an ad blocker, man. I miss it.
This probably isn't the right follow-up question, but it's where my brain goes. Is like,
Sure.
did that push you into looking at other like e-commerce verticals? Like, did you get like that all of a sudden, oh, hey, there's an opportunity, and then you start snowballing into those? Or did that feel like a one-off opportunity in terms of its vertical because of the space and the timing, et cetera?
So we definitely did some more, but in e-commerce. However, doing more in e-commerce helped us to appreciate how unique Chewy was as a company. And we do a very foundational analysis called customer cohorts, which is you track how much a customer spends over time. And Chewy, for a transactional consumer e-commerce business, it was like the customer came and they never left. They kept spending the same amount, and we're talking over time for a decade. And so it was the most stable, predictable spend pattern of any consumer business we have seen. And normally, like a very good enterprise product gets that kind of retention dynamic. And so Chewy had figured out something in a great category. It's definitely a special company. We sold the business for $3.3 billion. And after just 3.5 years after investing, and it was a great success for us, but hard to replicate. I do think I have a company right now that reminds me of Chewy called US Mobile, which is a mobile carrier. You can get your cell phone service through them. And so it's taken like a decade to find a company that has similar dynamics.
So a company like Chewy that comes in, you said they're doing 25 million when you made the investment. They looking for, was that just financial and then you sit on a board? Are they looking for guidance, support, help? Like, when you're at that size, what are you looking for out of the investors that come in?
This is a pretty good
If
question.
they already got the team mostly in
Pretty
place,
good
and
question.
Your job is really just to kind of follow along and maybe just be a fiduciary as far as a board member, et cetera, or investor. Or are they still at that point looking for you? Hey, can you make a connection here? Do you have any expertise here, et cetera?
Yeah, I mean, at the time, they had never raised capital. They didn't have a board. And so the first board meeting in the firm's history was after we invested, me and the two founders, which was a lot of fun. I'll always remember that first board meeting. They didn't really know what was supposed to happen in a board meeting, which is totally fine. But the two founders handed me 4 printouts pages from QuickBooks. And they passed it to me over the table and said, "Okay, so what do we do in a board meeting?" that was the board meeting, and it was a relatively brief one, I have to say. But by no means at the point that we invest, the team is not fully built out, the strategy is not fully developed, and the capital needs may not be fully addressed, and so. There was a lot of big steps with that company. We made a strategic decision to actually insource all of our own fulfillment centers for fulfillment capacity. We were using a third party, and we decided to actually build our own, which is a huge decision. We helped to raise capital to do that, and there were expansions into different product categories, expansions in different geographies, and so there was a lot going on at the time.
But I think for you guys listening at home, one of the big takeaways from there is think about this. Chewy's $25 million in revenue, right? And you're saying they don't have everything built out. They don't have everything, every system's not.
No.
So I think, they just take a little pressure off yourself, guys, when you're building these companies and you're early. I think there's a lot of stress that I think founders put on themselves to be mature faster than maybe is even positive, right? I think sometimes immaturity in certain places helps you look at problems differently, ask for help from people.
Let me know when this guy
When
stops
we
talking.
race to maturity really fast. We sometimes get this idea that like we're supposed to know everything and we're supposed to know how a board meeting works and we're supposed to know how every system works. And it's like that. I've talked to very successful people on this show, 100 million plus, exits and all this different stuff. And they'll even tell you the day they're exiting 10, 15 years into their business, they still don't feel like they have everything lined up. So it's like, I think sometimes, especially early or first-time founders, et cetera, they put so much pressure on themselves to be perfect when I don't know that anyone, and I guess maybe I'm just looking for validation on this. Like, you're not expecting them to be perfect when they start talking to you.
Not at all. All of our companies we would probably describe as raw operationally. I often say, like, over the course of our investment, a lot of things change, but certain important things stay the same. What stays the same is sort of the problem that you're trying to solve, the customer that you're focused on, your commitment to that mission, the culture that you're trying to instill into your business. That stays the same. What changes is the scale. And the organization of that scale, and it better change because you want to grow. And so how finance changes, sales, customer success, your board, all of this stuff, it'll be, hopefully if you're successful, 10, 50, 100 times the size. But who you are as a company should stay the same.
Now, you also sit on the board of directors of GameStop still today.
Yep.
Were you on the board during the big what was it, the Reddit run up or whatever, the message board when everyone was going and driving the price all over the place? Were you there when that was going on?
Thank goodness no. I came in right after that, and maybe I'll connect the two.
Yes, please.
Ryan Cohen was the founder and CEO of Chewy, co-founder and CEO of Chewy, and he became the active investor behind GameStop, and is now the CEO of GameStop, and so. That's my connection to GameStop, and I joined the board to help out shortly after all of that.
Yeah. Now, I know you weren't there during the time, but I'm sure you've had discussions about that moment since. And I know even there's been a couple secondary tries at doing a similar run up, and it hasn't worked as well, et cetera. Like when you're sitting on a board and
hold on, what is this guy talking about? I don't need to. Whatever.
I've never sat on the board of a public company, so, this is experience that I don't have. I'm very interested. And you see that kind of your stock price, everyone looks at a company basically if you know, and I'd say particularly amateur or unsophisticated investors, and they basically just look at price and they look at how much they're willing to spend on something and they put this arbitrary value on it, right? When you're sitting there as a board member and you really understand how these market dynamics work and you watch something like, you know, some price manipulation happening, which is what was happening, right? I mean, people were driving the price up and you know, obviously it came back down, but you know, how do you handle that as a public company and managing, you know, what's happening with a stock price and you know, having to hit quarterly earnings and all that kind of stuff versus the private company world where you're not necessarily on that time clock if you're
That's a decent question,
bills, right? As long as you're not running out of money, you're
decent
not necessarily
question
on a clock. Like with a publicly traded company, you have to do quarterly earnings reports. You have people pushing price up, pushing down, shorts, you know, all these different things that you have to deal with. Like, how do you manage the value of the company differently? And just what are some of the things you have to consider public versus private?
Yeah, I appreciate the connection between the two because I live in the private company world and I'm on a couple public company boards, GameStop and Grove. And I think I bring that private company mentality into it, which is I don't worry about the day-to-day movements of the stock price or, and I actually don't look to optimize for a quarterly earnings report because our job is to build the business for the long term and make those decisions that set the business on a great foundation to grow profitably in the long run. And that's what we do. So if there's volatility between here and there, it's, you know, it's not even occupying my mind, to be honest. It's really about just making the right decisions for the business over the long run.
With AI,
you can create any character you...
That was a good question. Good answer, too. Really good answer.
Well, I want to transition into what you're seeing in the market today because I have a bunch of questions from where you sit and what you think about. First, I want to go to crypto, right? In general, is this a space you follow? And two, like, obviously we've seen a big move down. Bitcoin actually it's kind of bounced back up a little bit, but as of last week, it was down 10% year over year. You know, a lot of questions around the crypto space. You know, my personal belief is that the technology outside of the tokens and the value of the tokens, the technology is absolutely game-changing, revolutionary, and ultimately where I see a lot of businesses going over time. But that seems to be, you know, I look at like I'll give you an example. I look at the insurance industry and the insurance contract in particular. And if insurance contracts were put onto a blockchain and that was ubiquitous across the industry, how much faster, how much more transparency, how much more pricing stability I think could be built into the market, but no one has even stepped their toes in that. I mean, it's literally just conversations at association meetings, et cetera. So where do you see kind of crypto in general? And are there any businesses or spaces that you see taking the application of a blockchain or crypto technology in general and actually being applied outside of just the tokenization of this technology?
Yeah, crypto is funny. When crypto is riding up, everyone's like, it is the game-changing currency of the future of the world. And when it's going down, it's like there's no intrinsic value. It's a joke. It's a Ponzi scheme. I do think there are practical applications. Probably the most likely and most bullish on is just the use of stable coins for international money transfer. That's a slow, expensive, complicated process, and I think that's where the combination of crypto and blockchain can do very basic business things like make a transaction cheaper and faster, and that's what it needs to do. I think there is utility for certain currencies as an inflationary hedge and as in the same way gold is. You could say gold is not a cash producing, yielding asset, but I mean, it's gone on a bull run the last couple of years, but it's always been occupied a space. I think there's space for that in crypto. There's a lot of junk in crypto. There's a lot of stuff that's going to be worth nothing, and it already is. And so that's sort of the nature of speculation in an early market.
Yeah. I'm with you on this. The stable coins to me are so obvious. I mean, I know a lot of founders, a lot of just business owners in general that I talk to they're the ones that are leaning towards the future a little bit, are paying, say, either expats or virtual assistants or overseas. They're paying them in USDC or USDT because it transacts immediately, so they have the money instantaneously. Essentially, the fees, there's no essential fee for the transaction for the most part, or at least relative to what it would cost to pay them internationally through a standard service. And just taking that expense out of the business, especially if you have a large international team, it can get you more bodies. I mean, I literally know people who have been able to put more bodies on their team simply by paying in stable coin versus paying just because of the fees you pay to transfer internationally. It's just easier for everybody. That one seems so obvious. I follow and am very intrigued and speculate quite a bit on Bitcoin. I think the rest are, I think it's very interesting how much sentiment drives that particular space. Like it's crazy. It's like this big human psychology experiment. It's wild. But yeah, I find it, and I think the underlying tech, as much as I can understand it as a lowly math major with a liberal arts degree, as much as I can understand it, I see that the technology itself being game changing, but the real world applications have been slow, very slow.
Yeah.
I unfortunately think a lot of that has to do with
What does your degree have to do with crypto? Or your opinion? I don't really understand that, but whatever.
craziness associated with the tokenization. And if that wasn't there wasn't so much garbage out there, I feel like there'd be more effort and enthusiasm behind bringing it into kind of how we operate and businesses outside of that space. But I guess the next one that we have to talk about from where you're sitting is AI, right? I mean, obviously, we talked a little bit before we went live around ChatGPT selling ads. Like, there's so much news. We're in the model wars. It's freaking nuts. Like every day someone's got a new point something that's X better than someone else. And, and then everyone's just using it to write emails. So it's like, what are we even talking about? But, from your seat, with your investment thesis, like, what are you seeing coming that gets you excited, that you're spending time on from a sector perspective?
Well, it's interesting. If I extrapolate up, I have seen more companies, AI companies, in the last 10 months that I would say have gone to 10 million in revenue with less than 10 employees in probably less than 1 year being in market than I have in my entire career. It is shocking, and that's all on the rails of AI. And there's a huge amount of experimental spend in everything. And what's challenging for us as investors is we don't know what's going to stick, and there's whatever is working. There's 50 competitors along the same lines, and it's the way I think about it is not dissimilar than how you might think about crypto or just any other business. Is set aside the revenue growth because there's so much experimentation happening. Who is solving a real long-term business problem or consumer problem well, and who is doing it in a way that builds a moat for your business? And I just ask those two questions and try and decipher everything else through that. But we're seeing really, I can't even begin because we're seeing so many applications. And by the way, all of our portfolio companies are embracing AI across their businesses. And so it's really fun. The hype cycle needs to chill out a little bit. All those VCs we were talking about at the beginning of the episode, they're all feeding into the hype cycle. They know it. They're all paying super high valuations that will not sustain, and they know it. They just don't want to be the last ones holding the bag. And but AI will certainly be transformative.
Yeah, I as an experiment, I was using one of like the vibe coding platforms just to say, like, you read all this stuff online, you hear different things, and I was like, okay, I want to just see like what's real and what's not real. Like, how hard is this actually to do? And I think very basic, just for those who haven't played with these things at home, very basic applications, simple API connections into different systems. You can set up and create some nice little neat, kind of straightforward functional applications. You can vibe code pretty well. And then there becomes a spot where if you want to really take this to the next level, you have to do real development work and solidify the systems and do different stuff. that I think is the next level. But what hit me was if this jamoke sitting in his house on a Saturday morning while his kids are watching TV is vibe coding up an application that I can sell in 3 hours, right? How does someone who's out there maybe solving a similar problem, but I'll say in a more real way, I don't want to discount vibe coded platform, but like, in a more entrenched and long-term way.
This Black Friday, you can clean your retainer at the touch of a button. Years ago,
right? How do you figure out the signal from the noise in that scenario, right? So like, let's say you've taken on, you've put your own money in, you have a team, you're doing something similar, and maybe from a consumer perspective sounds similar, but is deeper, richer, more secure, et cetera, than something I just, told the computer to make while I was having my cup of coffee on a Saturday morning. But to a consumer, front facing, very difficult to differentiate between my very light vibe coded thing and this more entrenched piece. How are you working with, or what are you seeing from your portfolio companies or just the market in general? Like, I don't want to say real businesses, but how do they, if this is something that I'm going to do for 10 years, right? This is a real company. I want to expand it. I want to grow it. I'm going to eventually want to take on capital, whatever, versus my like little side hustle, side quest project, right? How does that company stand out today when there's so much noise in the marketplace versus the 400 vibe coded things that kind of look and feel like it?
Yeah. Well, businesses can differentiate on other things other than the code of their product, right? And so, I mean, we talked a little bit about Chewy. Chewy was going directly up against Amazon. It was much, the 800-pound gorilla, and we won on customer service. So I look for an AI application / company can they differentiate on other things? Is there a community element that's a moat? Is there a service element that's a moat? Is there a pricing and packaging orientation that's better suited for their market? So there's layers around the business. Is there a go-to-market strategy that is different than the other one? Because you can win by doing a lot of other things right despite the products being sort of comparable. Think about how many versions of water are on the shelf. If there's a commodity product, perhaps it's water. Yet certain water brands win, like Liquid Death or others. And that's because they've done something different with brand and distribution and their community and so forth. So I almost think about it in that dimension is, okay, forget the code for a second. Let's look at everything else and how are you going to win?
Yeah. It's funny. I was thinking through this idea with coffee. I had a founder of a coffee brand on 7 Weeks Coffee. He was on a few weeks ago. And, we were talking about this because, man, I mean, there are just a million micro, we'll call them micro coffee roasting brands out there. Yeah. And he basically said, and his spin was more like, his was like a Christian pro-life, very kind of classic Orthodox Christian views is kind of the tact he took. But, you look at Black Rifle Coffee, you look at, all these different, the way they differentiate. I mean, if you can tell me that you can really taste the difference between all these different things, I think you're lying to me. I mean, not that they're not good, but yes. I mean, come on. I mean, there's 10 million different roasted coffee beans. There's only so many ways you can make it taste, but it very much feels like the brand and the connection to the community is how they differentiate themselves. It could literally be roasted in the same place and put a different package on it that speaks to a different audience. So do you feel like today, like what I have been talking a little bit about and thinking through is that while brand has always been important, content and how you tell your story has always been important, in this kind of era of AI where people can spin up narratives so quickly, it almost feels like your brand, your message, your community, and this is kind of where my question is going, the personal brand of the founder or founders has become more important than ever before. Almost like I mean, look at Elon Musk. Like none of his companies do. I mean, obviously Elon Musk is an exception to an exception. So I get what I'm asking here, but none of his companies do advertising. None of them. It's just him on Twitter talking, saying crazy shit, and everyone goes and checks out his company, right? So like, I guess very few founders will ever be Elon Musk or say the crazy shit that he says, as much as I love him. How do you balance that, right? Do the founders need to have a personal brand today? Does there have to be some core intrinsic, this happened in my life and this is why I started it story? Is that more important than before, you think, because of this? Or is it just kind of same and need to be good?
I think it's really important, and I preach this to my founders and CEOs, to be external and to be authentic and to be engaged where your community is. A great example of this in my portfolio is the founder and CEO of US Mobile, Ahmed Katak. He is dominating Reddit. All product development ideas go on Reddit. All announcements go on Reddit. Customer service is on Reddit. I think we have the largest corporate subreddit on Reddit for US Mobile, and it's a very authentic community, and he's right in the middle of it. And he takes hate, he takes love, he takes everything in between. And I think we're in a day and age where the face and the founder and the CEO of the business can't be hidden. You've got to be upfront, and you've got to engage, and you've got to be real. Even as a public company CEO, it's like, if you're going to rely on the quarterly earnings call as your communication with shareholders, that's from 50 years ago. I mean, we've got to come into this age, and so I actually think that is super important. And to go back to your AI question, if you have two AI companies with like products, but you have one founder who's built a community in a social ecosystem around it, and the other who's just coding in the back, then you have two completely different companies. And so I'm very much forward on that dimension.
Yeah, I look at Jensen Huang from NVIDIA, and as their run-up has happened, and he started getting out there more before the big run-up, but during it, he has been out front. You see him at more conferences, more talks, more panels than I think you saw him in previous years. And I have to believe that is not accident. Right? I think that's not like one day he just woke up and said, I think I'll start doing more talks today. I mean, it very much feels like a strategy, and, the messaging behind it of I think it's gone viral quite a few times now, but that whole, it's supposed to be hard talk that he gave. I feel blessed that, I had these hardships because they made me better. And, too many founders are looking for easy, and that whole thing he did. I'm butchering it. You can go find it, guys. It's gone viral a couple times, and it's brilliant. I mean, it's absolutely brilliant. But it also kind of makes you when you hear that, if you're that type of I'm gonna go get it, I'm gonna work hard, I'm gonna dominate the world mentality, whatever your thing is, you can't help but now lean towards him a little and be like, geez, I kind of hope these guys win. I love that. You can't help yourself. It's a human reaction. And, I guess my last question for you around this is just if you do get that founder who really wants to just sit in the dark room and code, that's their zone of genius, that's where they want to be. Would you, and if there's another option, add it, but I guess the two that I'm thinking about are, do you recommend that founder stay in the room and stay in their zone of genius and hire out a face to go out and start telling the story? Or is it, look, I know that's where you want to be, but part of your role as the founder and CEO of this company is you need to spend some time in front of people and start to develop that side of your career of how you operate?
Yeah, I probably shouldn't knock founders who want to sit in a room and code, because there have been some great founders who are in that bucket, Mark Zuckerberg being one of them, who I've met in the past. But I might suggest this: just turn on the camera during your day a little bit, and be who you are. And maybe you're basically Twitch streaming as your code. But people want to see the real thing, and even if it's just a little bit every day, it actually says something. It tells your shareholders, your customers, whoever, something about you. You don't need to be Jensen Huang and go and do TED Talks if that's not who you are. But even sharing a little bit from your day, I think that's awesome.
Yeah, I love that idea. It's funny. I'm been in insurance for a long time, been an executive, different things. Today I do more consulting and coaching, and then obviously I run this media business. And sometimes I don't want to say bored because I probably always have something to do, but like, let's say I'm just kind of like banging around through my day. A couple times I've just popped open my phone, turned it on live to like Instagram or something, and I'll just be banging away on my work, talking about an idea or something I'm doing, and then people ask some questions, and like those will go crazy. Like people will be like, "Why are you doing this? Why? Why did you? And some of it's like silly decisions, like why did you choose Substack for like your home for your business? Whatever." And these are real questions that people have. Varying degrees of difficulty and triteness, but ultimately important to people. And I'm literally working just with the phone on alive, and then you're looking down and seeing questions that come up and answering the questions as you're working. And it's very simple to do. And I think that, I think we're particularly people who tend to be more, tacticians of the thing that they do. They don't want always that content piece. It almost feels like beneath them sometimes. I've had people say like, that content stuff's for influencers. I don't want to be an influencer. I'm like,
Joy is.
You are an influencer, but you're the CEO and founder of this company. That you are an influencer, whether you think you are or you aren't. You are, and I think that's a real thing that we just can't get away from today. It feels like part of the job. It doesn't feel optional anymore.
Yeah, I do Twitter live streams every once in a while, maybe once a month, something like that. And the first time I did it, I had a very clear agenda of what I wanted to talk about, and I had certain questions I wanted to address, and this and that, and I put together a nice PowerPoint deck. And now it's just like, I'm gonna go live, whatever you guys got, let me know, and we just go. And it's always well received. I think people want to see you in your real element and just be who you are.
Yeah, I completely agree. Larry, this has been an incredible conversation. I could talk to you for another couple hours. I love your methodology. I love your mindset and how you're approaching this. And I think, in particular, this idea, we've talked about a lot of really good stuff, but this idea of turn your long maybes into quick no's. If there's anything, guys, that we can take away, it's great for fundraising. It's great for sales. Like I said, it's great for really anything in your life that you're trying to achieve. We don't want to waste time on the people who aren't serious or committed to us. And there's 8 billion people in the world. So if you have something of even the smallest amount of value or potential, eventually you will run into someone who believes in what you believe and wants to be part of it and just keep going. I absolutely love it. Larry, where can people get deeper into your world if they want to follow along with your journey, or they want to know more about Volition and what you're doing, or maybe they are a founder and they want to talk to you guys? Like, how do they get deeper into your space?
Yeah, so Volition is volitioncapital.com. I'm very active on X, so my handle is LarryVC. And both Volition Capital and myself are on LinkedIn as well. So those would be probably the X, LinkedIn, and the website are the ways to go.
Tremendous. And guys, I'll have links to everything that Larry just mentioned, whether you're on YouTube or wherever you listen to podcasts. Just scroll down in the description. I'll have links to everything. Dude, appreciate you. Appreciate the time. Tremendous. And anytime you want to come back on, open invitation, my friend.
Thanks so much, Ryan. It's a lot of fun. Take care.
Alrighty. That was pretty good. That guy talks way too much. Who is this guy anyway? Let's see. Who is this guy? He has 210 episodes. Good lord.
When you
He just interviews people, it looks like. I don't know. He doesn't get, like, many views. What's his most popular video? Jeez, 12 years old? That wasn't bad, though. I feel like he knew nothing about Larry, but great to see. Yeah, that wasn't... He's not the best interviewer. He talks too much about himself. Like, we were there to listen to Larry talk, and You know, all he needs to do is ask questions. Like, his job's so simple. Like, nobody wants to hear from you, Ryan Hanley. Nobody gives a shit what you have to say. I'm sorry to say, but like, nobody cares. We want to hear from the person who you're interviewing. Like, I feel like that should be pretty obvious, but a lot of these people, you know, influencers, people in general, you know, they just like talking about themselves because that's just what people do, man. People like to talk about themselves. So I get it, but like, you're an interviewer, my guy. You should be focusing on the person you're interviewing, not talking about your opinion. Your opinion is irrelevant, honestly. We're here to listen to Larry. We're here to listen to Larry, not you. So, I don't know. That's all I gotta say about that.
Portfolio is the.
That's all I gotta say about that. Let me try to get a spot for
Hey,
Larry.
husbands, Christmas is coming.
Bitch. I just want Larry on, so when I end the stream, he'll be potentially the thumbnail.
I do think.
There we go. Okay. Okay. Maybe he thought he was interviewing for Larry, hoping to get picked up by Volition. Maybe. That'd be crazy. That'd be crazy. Yeah, I'll have to try to find some of these guys' emails and see what I can do. That'd be so dope if I could interview them. That would be so dope. This has gotten a decent amount of views since we started watching it, though. I don't know if it's because of the stream or because of his Twitter post. One was me. Rooting for you to get some interviews. That'd be epic. Yeah, I'll have to look into it. I don't really know how to find people's emails, but I'll figure it out. I'll figure it out. Because I feel like I could do a better job interviewing than that guy, for sure. Most definitely. But that was chill. That was chill. At least we had something to watch. Something to do for a little bit. Is there anything else we need to check out before we go? Let's see. See, it's crazy that there's just got to be a lot of bots following like Larry and like Nat Turner and stuff. Like, how do you get 15,000 views on your Twitter post, 311 likes, 37 reposts, 32 comments? Like, how do you only get 85 views on an interview? Like, that, it just doesn't make any sense. Doesn't make any sense. But whatever, man. Whatever. Seems to me like there's a lot of bots, but who knows? Who knows? Good lord, silver's over $60. That's insane. I don't think there's much else. Red sex. Yep. I think that's, why did I lost the video. Gosh dang it.
Tokenization.
In fact.
I'll keep an eye out for the next live. Yeah, you guys have a good weekend too. Maybe I'll do a stream over the weekend. Who knows? I don't know. But I appreciate you guys stopping in. I hope you guys have a good weekend if I don't see you over the weekend. But yeah, thanks for the suggestion. I didn't know we were about to find a Larry Cheng interview. That was awesome. That was awesome. I loved that. But yeah, you guys have a good weekend. Maybe I'll see you tomorrow. Maybe I won't. who knows? But either way, I appreciate all of you guys. Thanks for always supporting the stream. Bottle of whiskey dropped off on my desk. Should be a good weekend. It'll be a weekend you never remember. Oh, man. He'd be drunk as fuck making cookies. But, yeah. Yeah. I don't really know what else to say, but I just appreciate you guys. Thanks for always supporting the stream, and even when it's like a slow, dead day today, the fact that there's people here is crazy to me. So thank you guys, for real. I appreciate your support, and I will talk to you guys soon. God bless ya. Peace!